Glasgow property investment, a gateway to Scottish growth. You know that feeling when something's just about to pop? Like that moment before the kettle boils? That's Glasgow's property market right now. It's bubbling, and savvy investors are circling like seagulls over Sauchiehall Street on a Friday night. Let's get straight to it. Glasgow is having a moment, not the kind that fizzles out after a couple of social media trends. This is rooted in real numbers, real growth, and most importantly, real bricks and mortar. So, why Glasgow? First off, prices. Compared to Edinburgh, which is practically Monaco at this point, Glasgow still feels like a steal. I viewed a 2-bed flat in Dennistoun last month. Lovely wee tenement, high ceilings, bay windows, the works, for under 170K. Try finding that in Morningside or Stockbridge. Go on, I dare you. But don't let the cheaper than the capital headline fool you. Glasgow isn't just riding on affordability. This city is investing in itself. I'm talking about actual investment. £1.13 billion poured into the Clyde Gateway regeneration, transforming run-down areas into gleaming hubs of business and residential life. And people want to live here, especially young professionals, students, and digital creatives who don't fancy shelling out London-level rents. Oh, and speaking of rents, let me tell you about a client of mine. Laura, mid-30s, tech job, relocating from Manchester. We found her a buy-to-let flat in Finnieston last autumn. Close to the hydro, tons of cool cafes, craft beer spots, you get the vibe. She paid $225K. By March, it was let to a couple of international postgrads for 1,450 PM. And get this, she had a queue of viewers the first day it went online. Literal queue. I hadn't seen that kind of frenzy since Help to Buy launched. Now, I know what you're thinking. Sounds great, but isn't the market cooling? Sure, the UK market as a whole had a wobble. Thanks, inflation. But Glasgow's a different beast. Demand here hasn't dried up. It's just gotten smarter. Buyers are pickier, investors are fussier. But when the fundamentals are solid, and they are, the cream rises, always. Here's something else most people overlook. Student property. The University of Glasgow, Strathclyde, Caledonian, they're all booming. International enrollment is up, student housing is short, and HMO licenses are gold dust. I've seen clients make serious returns converting traditional flats into compliant, high-yield lets. It's not always straightforward, licensing, planning, tenant profiles, but when it clicks, magic. Oh, nearly forgot, transport. Glasgow's rail links are cracking. And with HS2 still somewhere between myth and maybe, more buyers are waking up to the fact that you can get to London in under 5 hours. Combine that with remote work trends, and people are reevaluating the need to pay £3,000 a month for a broom cupboard in Clapham. Of course, it's not all sunshine and rental yields. You've got to watch out for tenement maintenance. Those communal repairs can sting, and factoring fees can be wildly inconsistent. Also, Glasgow's licensing laws are tightening up. The new short-term let regulations have shaken up the Airbnb crowd. Some are bailing out, but for long-term investors, it's actually created less competition and more tenant stability. Win-win. Quick tip? Always check the title sheet for shared responsibility clauses. I once had a buyer who missed a £9,000 roof repair clause. Not fun. So here's the scoop, plain and simple. Entry prices are still manageable. Rental demand is solid, especially in trendy pockets like Partick, Finnieston, Dennistoun. City regeneration is in full swing, and savvy investors are already moving in. But don't just take my word for it. Walk around the West End on a Saturday, pop into a viewing, chat to a local landlord, preferably over a pint. Glasgow's not just growing, it's glowing. And if someone had told me 5 years ago that I'd be putting Drumchapel on my ones-to-watch list, honestly, I'd have laughed. But here we are, and it's looking pretty good.